All right, so let's be honest here. Raise your hand if you have ever been in a situation where you have bought a stock, maybe after market open, maybe you had some news, and you buy a breakout just for that same breakout candle to turn around, turn into a big top wick, get massive sellers stuffed into it, and then it just drops like a rock. Raising my hand because I've done it before too. And so I basically found out over my 8 years of trading why this happens and how to identify it by just using some very basic analysis of the daily chart. There's nothing crazy about this. No crazy indicators, no crazy scanners, no crazy math. Just looking at the chart and the price action, more importantly, for what it is and identifying what we call bag holders. So a bag holder is someone that is holding the bag. So say they bought the stock 6 months ago at $1 per share on some big gap up. And ever since their buy, the stock has sold off down massively. Maybe it's down to 50 cents. So they're down 50% on their trade, right? And so they're holding the bag. They don't want to cut the loss. It's already too late. They might as well hold it to zero. That's what people say. And so what tends to happen is, say the stock ends up having some news one day, the stock spikes up to maybe 90 cents, and all those dumb bag holders wake up one morning and they say, oh my gosh, my portfolio is actually close to break even. The smart ones are going to sell. The dumb ones don't sell. And then when it sells off lower, they panic. So we're going to have lots of chart examples here so I can really break this down. But this all just stems from the idea of bag holders. So we're going to learn today about how to identify if a stock has bag holders. So then you know to maybe avoid it or give some extra rules to not trade it. Here is my morning watch list from this morning. And you can see the last stock I have here is HCWB. And that's going to be the focus of today's topic. And you can see I wrote significant bag holder pressure in the 120s to 130s. I'm watching for a break and retest of pre-market high for intraday bullishness, but just be aware if this fails to hold support, it can sell off very fast because the bag holders will panic. So let's dig into this chart and exactly figure out exactly what I meant. So my morning process is always very similar. I just have a very basic scan. I trade small cap stocks. So I just scan for stocks that are gapping up on some good volume. And then I go through each stock one by one and just look at the chart. And so if you've seen any of my videos, then you know that my main strategy is built up on the idea of using previous resistance as new support. And so most people do this or try to do this, but they kind of, they overtrade. And so if you look at this chart, HCWB, you might look at this chart and say, oh, well, look, there is a potential previous resistance area as new support near like 87 cents, right? As long as this level holds as support, it could remain bullish, and then you might get the idea to buy into that retest. Or even worse, say you don't buy that, and then you see it start bouncing and it starts testing this into this breakout, you might get FOMO, the fear of missing out, and you might preemptively buy into this, hoping it's going to break out and squeeze. But before I even thought about anything, number one, I have an overarching rule with all of my small cap trades. Almost 98% of my trades follow this rule where I don't buy under pre-market high because I want to wait for a stock to be bullish. So just off that, I mean, we could just end the lesson here, but yeah, this was never a trade. But there was something about HCWB that made me know that even if this does break out, I don't think I'm going to be interested. So looking at this daily chart, this is what you want to avoid, right? And I really want you, if you haven't been part of my community before or you're not really familiar with my videos, we're going to talk about stuff that you may never have heard about, but it's going to hopefully make just logical sense, okay? And I'm going to walk through this as easily as I can, because every chart tells some type of story, okay? And you have to learn to read the chart and understand that story. So here I can see that, okay, well, damn, there was a big gap up here, right? You can see on November 15th, the stock was at 28 cents a share. It traded 25,000 shares. No one was touching this thing. And then all of a sudden, I'm guessing over the weekend, on Monday, on the 18th, it had 500 million shares traded, and it gapped up from 29 cents and opened at 90 cents almost. 90 cents. Massive gap up, right? And so This is a huge day, right? There was massive volume that happened here. And so whenever I see a daily chart that looks like this, where there's just this one mega volume, huge random spike, there are two key levels that you need to mark off to gain the context of bag holders. Number one, go to the line chart and just mark off where that high is. So here it's at about 123, 124. Second, I want you to mark off where the VWAP is from that day, the volume weighted average price. That's it. I know I said no indicators, I lied. There is one, it's just VWAP, that's it. And you can see I have a script here on Thinkorswim that just adds or draws off daily VWAP levels automatically. So with this context, I want you to just think about the story. What happened here, okay? Let's just imagine. Majority of traders woke up on the 18th, they saw the stock gapping up, had maybe some catalyst, some big news, who cares? Doesn't matter. It had huge trading price action, huge volume. And we can see that the average share that was traded on this day was at about $1.32. Okay? Of 500 million shares, the average trade was at 132. And so the next day only traded 50 million shares. And then ever since then had no volume at all and just kind of slowly died off, right? There wasn't any big crack. There wasn't any big panic. It just kind of slowly died off. And so this dynamic, right? There was massive volume on day one with the average trade beating at $1.32. And then it's slowly dying off. You just kind of get the sense of, man, like most people that traded at $1.30s probably are still holding, right? I mean, I'm sure you've experienced it before where maybe you don't have a plan. Maybe you don't know what you're doing and you're brand new to the market and you take a trade and you buy. Maybe you go all in for whatever reason. You see a post on Twitter, you see someone pumping it, your friend, your coworker, your grandma, who cares, right? Uber driver, doesn't matter. And you get to the stock, no real plan, just hoping it goes up. And then it starts kind of selling off. And because it's not dropping super fast on a single day, you just kind of, it's that kind of analogy of like a frog in boiling water where like you kind of just keep on being accustomed to being down 10% again today, down 10%, down 10%. And then all of a sudden you're down 50%. And then at that point, why sell? You know, there's no point. Might as well just hold and hope and maybe we get a lucky bounce, right? So most people are now holding the bag. And so what are they going to likely do, right? They're not selling down here because there's no damn point, right? No point to take the loss, just gonna wait. And so they're gonna wake up one day, eventually, the stock's gonna have news again, and it might gap up. But because you have all those bag holders there, they're gonna be so likely to want to sell that it's going to really inhibit the upwards momentum. And we can see that's literally what happened here. Stock spiked up again, good volume, 300 million shares, but it couldn't even get to where the average price was. Like most people didn't even get break even. But so what this does is it causes this dynamic to where the smart bag holders, if that's a thing, they're going to preemptively get out as close to break even as they can. And then the dumb bag holders, the ones that are just going to hold and hope that maybe it goes green, well, once they see any weakness, they don't want to experience the pain of being down 50% again. So as it sells off, they're going to panic. And that's why usually these type of gappers that have this very crappy bag holdy stock or very crappy bag holdy chart, they're going to see panics. So that's the way to avoid these, right? The best way is focus on bullish stocks. Join TradeBuddy. We have a watch list every single day. One of the stocks that we traded today was IVVD. And you can see IVVD, bullish. This thing is up from 50 cents to $1. Over pre-market high, no bag holders. Look at this chart. No bag holders, no big volume. It's just free to run as it wishes, right? No bag holders, no key levels. It can just break out and run. This is a great chart, whereas HCWB, awful chart, right? Bag holders. Look at the daily chart, identify if there is volume trapped, and then like understand that the closer it gets to that back order level, the more it's going to see selling. So here's a second example of exactly what you do not want to see when it comes to daily charts on small cap stocks. Just look at this thing. You zoom out, you can see that this stock has done insane amount. Look, it's off the chart. They've done so many reverse splits that what this basically, look, I'm still going. What this basically means is that if you had bought, let's see, what's the highest price? If you bought, what is this, 1.3 mil? If you invested 1.3 mil into this company on July 8th, 2020, then today it's worth $6. So this is obviously a crap stock, right? So what tends to happen with these really crappy, over-diluted, just trash penny stocks is that they're going to, over time, sell off, right? So they're almost guaranteed short sells. And people short them like crazy, right? But because at some points there's just so many short sellers piled into something, there might be some catalyst and there might be some short-term, small, very small short squeeze. And if you can trade those spikes, great. But the best thing you can do is have in consideration the daily chart. Mark off your levels of previous support because they're almost always going to act as new resistance. So look, we can see CRKN has this $20 level, right? Bounced off there, then broke down. It can bounce, sure, like I did here, but it's probably going to reject that previous support as new resistance. Look, market open happened at 1879. And if you were just someone that chased the market open because it had some volume, some news, whatever, then you missed out on the broader context that this is a bag holder chart. It's going to see a resistance. Look what happened. Smacked into that, held resistance, now it's down lower. Look, so what's going to happen here? It's probably going to bounce. Sure, it could bounce up to $10, but it's going to likely reject that previous support as new resistance. If we go back to its history, this is what this stock always does. Look, every time it has any bounce, it just rejects, always. So you cannot ignore the big picture. Look at this. Another example right here. Look, previous support acted as new resistance. So guys, the best thing you can do to avoid losses in small cap penny stocks is to take into consideration the daily chart. Don't just get all zoomed in on the 5-minute chart. Don't get all zoomed in on the intraday. Always, always, always keep the big picture in context. And by doing so, you'll have just a much better picture of what's going on, and you can determine, is this worth going long or has this already kind of done its move? So if you want more in-depth trading content and education, click the first link down below to join TradeBuddy. It is my community of traders. We have webinars every single day. We have a full course. We have a chat room. We trade every single day live. So check it out, and I'll see you in the next video. Peace.